Let's also bring in Rajesh Kothari, MD at Accurate Advisors. He joins us live on Street View at lunch. Rajesh, hi. It's been a very good perk up for the markets. We've broken above the 20 DMA for the Sensex as well, ahead of the crucial fortnight, June 17th as well as 18th being extremely crucial date for our market. What do you think the market is pricing in, or is this just a technical pullback that the market is seeing?
No, I think, we will get a variety of reasons, sometimes global and sometimes local, but the fact of the matter remains that in this year, particularly at least in the first half, our view still remains the same, that you will see market in a range bound, anything between 4,800 to 5,400. That's the range where market will keep moving. And there are various factors, which will make it very volatile, particularly more so from the global side. But overall, I think this range will still remain valid. You have a very satisfactory, I would say, the fourth quarter results. And post that, of course, in the interim, you had a very good positive surprise from RBI as well. The crude is also in your favor. The corporate earnings growth is going to be better in FY13 compared to FY12. So, you have a variety of factors. The inflation is in your favor. The interest rates, because of the lower inflation, has been already reduced by, Reserve Bank of India. The corporate earnings growth, which was about 9% in FY12, is going to bounce back probably to double digit, maybe 12% to 14% in FY13. So, variety of these factors are positive sides from the market perspective. And to our view, that's why probably this kind of a 4,800 kind of a bottom, that particularly will hold on, because that's around 14 times, 9 months forward. Why we do not believe market will go in a very big way to 6,000 levels, at least for next 3 to 6 months, because still the policy inactivity is still one of the major factors. And if there is any movement from the government side, then you will see significant upside beyond 5,400. So, for example, in last 1.5 months, there have been some movement like, fuel price decontrol. Government is able to manage at least some price increase on petrol front. The coal blocks, is now, the policy is started on that, and few coal blocks have been already awarded. Today, as you've been discussing on your channel, the PM is meeting for the infrastructure on the power side. So you would see a few baby steps clearly from the government side, and if they take more of such baby steps, then I think that will be really good positive surprise from the equity market perspective.
Baby steps is probably the right way to describe what the government is doing, but specifically on infrastructure, we've seen a huge amount of expectation build up ahead of that crucial meeting of the Prime Minister with some of his colleagues. What is it that you're expecting, and do you think it could be a trigger for a sustained rally in some of these infra names which have been beaten down over the last 6 odd months?
Well, I think you would not see what I would say. It is a process. I don't think it is a one-day meeting which is going to sort out any major things for any particular sector. I think it is going to be a process, and one by one roadblock which the industry is right now facing, that has to be removed in a very, very conducive way, in which the lenders, the producers, the environmental side, the clearance side, that particular ministry, all needs to be involved to get it, for next 2 to 3 to 4 to 5 years. Because unless and until we do that, then you will see the wall clearly for our GDP growth, which is anyway reduced from our high hopes of 9% plus 2 years back, now 8% below, and now people are talking about 6.5 to 7.25%. So I think, if you ask me honestly speaking, whether this move today, from the government perspective, will it be any major positive surprise? I'm right now not expecting that. If you're asking from the market perspective whether the rally may sustain, answer is probably yes, because we are at around 4,800, 16,400 kind of a levels. So valuations have been beaten down significantly. If you look at blue chip companies like Tata Power or any of the power company for that matter, look at IDFC, one of the largest probably funding to the infrastructure sector. These are really at very nice attractive valuations. So I think from the valuation perspective, there is a clear move which can make them up about 15 to 20% from the stocks perspective. And that's basically what we expect in a range-bound market, where you would see market maybe 4,800 to 5,400, but many stocks in that particular moment can give 20 to 25 or even 30-35% returns. So I think this stocks momentum, it can still continue irrespective of any major outcome from the today's meeting, because anyway I don't think one should expect any huge dramatic decision from the today's meeting.
Rajesh, what about the meeting on aviation? Do you think something significant as FDI in the sector or perhaps something on ATF fuel could actually come about?
I think it is long due, and I think at some point of time definitely one would expect that government will do something for the aviation sector. Would it come and when it comes, will it come today, tomorrow? I think it is a matter of speculation. But surely again, even in the aviation sector, the good stocks have already, probably you have witnessed significant correction already, and the valuations do offer upside from current levels.